June 30th, 2025. The day started off with a 4 bar micro channel for the Bears, bars 1 through 4, very likely to get a second leg. We did obviously have a gap up, and you can see we tested the prior day's high on bar 1, but the bar closed strong, so not really all that great for the Bulls. 5, 6, and 7, not a very good 3 bar micro channel. I really try to avoid trading 3 bar micro channels against 4 or 5 bar breakouts or whatever it is. Um, so I did not take bar 7. I thought it wasn't all that great of a trade. We got 3 legs up to bar 13, and then 13 got followed through on 14. So 13, 14 consecutive bear bars. Decently strong, but it might be a late leg. It could be 1, 2, maybe 3, maybe 4. You can see we're on this area. So it's a little bit difficult to be looking to sell. If you do sell, 15 and 16 are not what you want to see. If you sell 14, you're hoping for a breakout below this and then probably a retest and another leg down. And instead, all you're getting is disappointment on 15. Okay, you could sell the close of 15, but 16 is not what you want to see if you did sell the close of 15. So a lot of the traders who took the short are buying back their shorts in this area. 18, 19 strong bull bars, but you have to keep the market cycle in mind. We're in a bear channel. So we've been in a bear channel for 3 or 4 legs down. What needs to happen in order for this to not be a bear channel anymore? We need a higher low and we need a higher high. And so, um, while 19 and 20 are good, they do not get the higher high. And you can see this isn't really a higher low. 19 is a very, very minor higher low. You can get minor higher lows, but ultimately, you want to see a breakout above this high and you want to see a higher low. So while 19 and 20 are strong consecutive bull bars, and if you buy the close and you scale in pretty relentlessly, you should be okay because it's a trading range, right? This is not a bear trend. It's a trading range. And keep in mind, the market transitions from, spike channel trading range, and we've been in the channel phase. So expect the market to turn into a trading range. So if you buy the close and scale in, you should be okay. But if you bought the top of a bear channel. Not really as good as it could be. 23 through 25 does break that cycle. So we got a higher low, 22. It's a higher low from 15. And 25 is a higher high than 20. So we are no longer in a bear channel. We're probably in a trading range. Doesn't mean we're going to go up. Probably just means we're going to stop going down. So that's another thing to note is that, once you break the channel, you're probably in a trading range. You're probably not in a trend. So for me, um, I did buy 25. I thought it was okay. I added more on 26, and then I added a little bit more as 30 was falling. I put a stop to exit below 30. 29 and 30 is a reversal and follow through, so that's likely to get a second leg. 31 is about as good of a bar as I can hope I'm going to get after 29 and 30, especially with my stop loss being right below 30. And then we get a really good bar on 31. Obviously, it did not work out this time because a reversal and follow through is very likely to get a second leg. We're very likely to get below this area. Some traders would use 31 to exit up in this area. I personally did not. I just stick to the rule set I have, and that is not within that rule set. So I ended up just holding, and then my stop was run here. So I took a small loss on this trade. 33 through 35. It's 3 or 4 legs up, however you want to count it. Um, I thought that 35 was a pretty reasonable sell. Well, the 22 low is going to be a magnet below. So probably going to be sellers, or probably we're going to try and test back into this area. I didn't think the channel up was all that tight. It was obviously a bit more of a broad channel. You are selling the middle of a trading range for 35, but I was okay with sitting through a pullback because I expected another leg up. 37 is about as bad of a bar as you can get if you're short. It's a big, strong bull bar closing on its high, and it's bigger than half the range of 33 through 35. I did a study, I'm starting a study is a better way to put it. But I did some studying on opposite bars this weekend because it's really important to learn how your trade interacts with opposite bars as follow through. It's pretty easy. Again, when the trade just goes your way, it's obviously a lot easier. But when the trade goes against you, that managing that trade is what makes it, trades makes a trader a winner or a loser. Everybody who bought the close of 65 made money. 100% of people who bought this close made money. It literally did not go a tick below. So everybody who bought this close made money, but not everyone who bought this close made money. Not everybody who sold this close made money. Some people lost money. Some scaled in higher. It's all dependent on your management strategy. So for me, when I got 37, I basically just exited above 37. I waited a minute to see if 38 was going to fall back down and give me an exit somewhere down here. When it just basically, when it bounced and then pulled back to the high of 37, I just got out. You could have scaled in and looked for the half an hour exit, but the problem with that is if you do, you end up exiting at a higher price. And so that's something I've noticed a lot is even when you get these really big, when you get these bars against you like 37, a lot of times it's just better to exit because even if it does go against you, or even if it does end up working out, you oftentimes will exit at a worse price. And you'll be more scaled in, so you'll make back the the little extra piece you lost probably, but you're basically just holding for extra risk when there's not really a reason to. 42, 43, 39 and 40. Sorry. So 39, I did not take 40. As 41 was pulling back, I had bought and then I just exited on the close of the bar for basically break even. I was initially thinking that we might go higher. It was a 4-bar micro channel, but an honest moment of reflection, I was just said to myself, this is clearly a late leg. We're clearly in leg 4. We're not in leg 1 here. This hasn't broken out of anything. Had we raced up and broken out above 1, then it could be leg 1, like this over here, this breakout. But yeah, I was not that thrilled with this trade, so I got out at break even right here. I did not pick 43. I had walked away for a couple of minutes just to basically, I didn't really want to be in the market at that moment. It was a very, very trading rangey day. So I walked away. I was not in 43. I sat back down basically during 46 or 47. I did not sell 47. It's not a very good 3-bar micro channel. And the whole day was, it's mostly a trading range. It was a pretty difficult day. 57 through 59 is a 3-bar micro channel. On the 15-minute chart, there was a 5-bar micro channel down. And this channel is a little bit tight. I did take it. I think it was a mistake. And I ended up exiting basically around the high tick of 62 as 62 was bouncing. And so I took a small loss there. But it really wasn't that good of a trade. I took it, and then the moment I took it, I kind of regretted taking it. You could exit below 60, to be honest. You don't want to see a strong bear bar in this case. I was worried we might have to go below the 54 low, but I ended up getting up here. I did not, I did not sell 62. That's a late leg. If you did sell to 62, you probably have to get out on the close of 64, reversal and follow through. So a lot of traders would exit on this close. 65, a 3-bar micro channel, really strong. I bought the close of 65. It was pretty, strong, and it's leg 1. Obviously I got a pretty quick 1R on the way up, 66, 67. I did exit here. There's not really a reason to, you know what I mean? With how strong this is, you can absolutely be holding and expecting another leg. This is likely to happen. That's the thing about buying this close, the close of 67. Yes, if you have to put a stop way down here, you're risking a lot of money. But this stop is not getting hit. It's very rare that stop's getting hit. And if it's going to get hit, it's going to give you a sign early in the trade that it's going to get hit. 70 might close somewhere down here. There's going to be something really disappointing that happens. Something like 42 happens here. And then you're going to say, oh, well, maybe it's time for me to look to get out. So this stop is very rarely getting hit. And most of the time, you're going to continue higher if you're willing to buy these closes. We might be at the top of a trading range, but it's a 5-bar micro channel, and it's the strongest move of the day by far. So even if you buy high, you should be able to scale in and make money. The daily chart. So I did take a small loss on the day. I made money on the month. I usually, the word profitability is kind of a funny word. I've been making money, but it's not like I make a lot of money. It's very, very small. It all depends on how you define profitable trader. I put in the description of my videos a while ago, I'm not profitable. And my definition of a profitable trader is, probably like a profit factor of like consistently a 2.4 or 2.5. And for 6 months, I would say, basically someone who's within 6 months of supporting themselves, making a living trading, and their numbers show it. The weird thing about trading too is it'll always make you feel like you're around the corner. I remember when I was starting out trading, I would always think, I'm a few months away from being profitable. I'm a month away. Maybe I'm 3 months away. Maybe I'm a year away. Maybe at the max a year away. And then that year would come around and I'd have the same mentality. I'm so close. I'm so close. And so, I don't know. It's interesting. Just a lot of people I talk to, just everyone seems to, I see a lot of people in that same thing. They're saying, well, I'm kind of profitable, and just it'll go a lot smoother if you just stop trying to make money. Is the weird thing about trading. The fastest way to make money is to not try to make money, because people get too worried about the money and less worried about executing a setup and trading, and performing properly, really. So people are too worried about the game and they're not worried enough about the practice. It's basically the best way I could put it. Um, so it's just kind of an ironic thing and an interesting thing to see where the the best way to make money is to not try to make money. So you can see I did have the continuous chart up. My buddy alerted me to the fact that we aren't at an all time high, or we're getting close, 62.58. So we might have to get there today, but 62.58 is the all time high, which my buddy alerted me of the other day because I did not have the contract adjustments on. But we should be touching it again within a day or two here. As far as the weekly chart, strong rally. It's like just for okay, I don't know what's going on with this, but basically strong rally, big strong bull bar. Bulls want follow through. Monthly chart. This is the close of the month, so the Bulls got a really strong close of the month. I am surprised that we created that large of a gap with the April high, but I still think that we will go back and test the April high. I just don't know when. But if July looks like June, then who knows? We might not have to touch that high. All right, that is going to be it for this video.